For investors following the artificial intelligence landscape, you'll understand that the growing demand for energy is only accelerating. These data centers optimized for artificial intelligence consume more power than traditional data centers, and so energy has been a critical focus. In this video, I'm going to evaluate Oklo, which is a fast fission, clean power technology, and nuclear fuel recycling company, and understand what's going on here and how this company stands to benefit from the rising demand for energy from these AI data centers. So let's take a look at this innovative company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so as I mentioned, Oklo is a fast fission, clean power technology and nuclear fuel recycling company. It's developing power plants to provide clean, reliable, and affordable energy at scale. Those are the key things there. Clean, reliable, and affordable at scale. Those are the things that these newer AI-optimized data centers are looking for. In fact, some companies that are trying to build data centers are unable to do so because of the lack of access to power. And so a company like Oklo aims to solve that problem at scale. So it has huge potential, and you can understand one of the primary backers of this company is Sam Altman of OpenAI and ChatGPT. So Oklo so far has secured over $300 million in gross proceeds, and they're well capitalized to execute on their plan. So they have the money to hit their next milestones, and if they hit those milestones, it'll be a lot easier to get even more money, right? So as you hit your milestones, you become less and less risky to outside investors, and their interest in investing in your company increases as you hit these milestones. And one of the key milestones they're working towards is to build their first Aurora powerhouse in 2027 to be operational by 2027. And if the company demonstrates progress, reasonable progress towards that goal, that could be huge in attracting investor interest. In terms of customers, their base is strong. They have 1,350 megawatts in signed LOIs across diverse industries. Now remember, a letter of intent is not a sale. It's just companies saying that, look, we're interested if you can deliver this technology at this price point in this location with these terms, we are interested. And so there is interest in this power source. And companies, of course, would be interested because, as I mentioned earlier, there's a shortage of power to generate these AI data centers. There's not only a shortage of power, just power in the right locations. These companies have specific locations they want to base their AI data centers in, and they need to have power to support those locations. And so if you have power, but it's in a different location that's undesirable and it's not feasible for a data center, then it's not going to work. And so these solutions could be a big game changer here, and they offer flexible, clean energy at that scale with customer needs. The CEO, Jacob DeWitt, said that their Oklo will fund the first Aurora powerhouses and aims to have multiple powerhouses up and running within the next few years, starting in 2027 with their first plant in Idaho. The prospect of purchasing independent power under long-term contracts is attractive to businesses across industries, and demand is strong. They already signed several letters of intent from several sectors, with the data center sector unsurprisingly likely to be the most prominent sector, at least in the next 5 to 10 years, as data centers optimized for artificial intelligence get built out. Remember, we have roughly $1 trillion worth of data center infrastructure based on CPUs. Those consume less power. They consume a lot of power, but less than these newer AI optimized data centers that operate primarily on GPUs. And so these newer data centers that need to be upgraded, right? Those previous generation $1 trillion worth of data centers need to be updated to these newer generation data centers because the cost of operation is so much lower with this newer technology, and the peak capability is so much better. And so businesses It's a return on investment that's so attractive that companies like Alphabet, Amazon, Microsoft, etc., are jumping over themselves to get these built as quickly as possible. And one of the constraints to building these out, in addition to some shortages in NVIDIA's GPUs and NVIDIA's technology, is a power source to drive this development. Sometimes the company has everything else in place, but doesn't get approval because there isn't enough power to support that new data center facility in the region it's trying to build it in. Already, this company has hit key milestones in 2024. They had their safety design strategy approved by the U.S. Department of Energy. They entered into land rights agreements in southern Ohio in February. In March, they partnered with Argonne National Laboratory to successfully complete the second phase of their testing campaign. In April, they signed a non-binding letter of intent to supply 50 megawatts to Diamondback Energy, which is an oil and gas company. And in May, they began trading on the New York Stock Exchange under the ticker symbol OKLO. So this is a newer company on the market. And they partnered with computer networking company Wyoming Hyperscale to deliver 100 megawatts to its data centers over a 20-year power purchase agreement. And then most recently, in August, they established a preferred supplier agreement with Siemens Energy for steam turbine generator products and services. So we got some interesting information along with the deal with the Wyoming hyperscaler. And one of the reasons why these data centers and hyperscalers are interested in this technology is because it reduces transmission and distribution costs for facilities like data centers by deploying these reactors on site. And so that's a cost savings right there. And then the smaller distributed reactors enhance reliability and scalability, fitting well with data center campus structures. Reliability is a key thing. You can't have these data centers be offline for a certain amount of time. And they also have to be able to scale. If that data center wants to add space, add power, you got to be able to accommodate for that. Or if you don't, it makes it less attractive. So Oklo does provide these benefits and could become something in the longer term. Right now, it's in very, very early stages of development, but there's reason for investors to be confident that the company will continue hitting these milestones because it has stakeholders that are very interested in its success, and the category that it's addressing is something so innovative and something so highly in demand that there will continue to be support for its growth at least over the next several years. So an interesting company to follow. I will certainly be keeping this company on my watch list and be informing my viewers about the development in its technology. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.